Well, Nina, you stole my 2 talking points to start. I was going to say we know that we're the last panel before the reception, and that everyone involved in organizing this really deserves a round of applause because it's just been a seamless day, and we know that doesn't happen by accident. So thank you to you, thank you to your staff, thank you for everyone from the University of Minnesota for hosting us. So without further ado, I'd like to introduce my panelists. We've got some really interesting topics. First is Pavel Martinique from Charles University Law School, Amir Mulligan from National University of Ireland, Alan Rosenstein from right here, just from upstairs, right? And Irina Stepnova from the International Communities Organization in Switzerland. So there have been lots of late night text messages due to our Central European focus. And on that front, I'd like to get started with Amir, and would you bring us for start the last panel of the day?
Great. Good evening, everybody. And the first thing I should say is thanks to all of you for staying. We're wondering would there be anybody left at this time. I should also say it's my bedtime and bedtime for somebody else here, I believe, in the panel. So I'll do my best not to go to sleep, and I hope you will too. So like everybody else, kicking off with saying a big thanks to Nina for giving me the opportunity to speak here. I suppose, like many people, I heard about Nina before I met Nina. And I mean that in a very positive way, obviously. But I did meet her a couple of times, but in particular, I suppose, a number of weeks ago when Nina came to participate in a panel in Ireland back home on taxpayer rights. And I suppose it struck me then, both through her participation on the panel, but also talking and spending some time with her afterwards, that her international reach with this initiative vis-a-vis taxpayer rights and in particular around the clinics is truly remarkable. So we're hoping that will extend to Ireland in the near future with some work I'm planning around the clinics. Thanks also to Kristen for yesterday, which was a really energetic and inspiring day around research. It's not often, particularly in Ireland, you get so many people enthusiastic about listening to each other when it comes to tax research. Just 1 or 2 comments before I begin the actual presentation in relation to the work that's been done through the Taxpayer Advocate's Office. I think the reason it rang a bell with me so much when I found out about it first was I've been teaching taxation at 3rd level back home for the last, I suppose, 19 years, I think, after I left tax practice. And very quickly it started to strike me that the people in front of me, I used to tell them, they were privileged, not because I was teaching them, clearly, but I started to really realize they were privileged because they were learning about tax. And that's a hard sell to tell 3rd level students they're privileged, because they're learning this very highly technical subject matter, particularly the way we teach it for accounting students in Ireland. And over time, that's become to bother me ever so slightly, because I think it became clear to me that it's a subject matter for the privileged few, in a sense. And whatever happens, whatever direction they go afterwards, whether it is into the accounting field or tax lawyers or whatever, they always have that basic exposure, if you like, at 3rd level. So what I love about the tax clinic idea in particular is it's going to allow me get these guys to use that privilege in some way very, very quickly, and they'll see immediately the real potential social impact, really, is what I'm interested in when bringing that initiative to Ireland. So maybe that thing bothering me 15 years ago is going to come to some kind of good through this vehicle. I know when we met with our core panelists, I hope I don't rob a line from you here, James, but we did talk about framing the session somewhat around, I think, the tax administration for 22nd century. And I did want to say, if by any chance any of us says anything profound, remember, you heard it here first, if it does happen in 2022 or 2021. So the project that I'm going to talk about, called Empirical Investigation of Effective Adoption of Digital Technologies in Tax Administration, with a particular emphasis on the citizen-centric part, is one that I'm commencing. So I'm not at the end of a project, I'm at the beginning of one, and it's a very new area for me to be working on. I am not a technology person at all, but my colleague up here, Boyega Ojo, my co-author, is a technology person with great expertise around a number of these disruptive, what's now being termed disruptive technologies. And I was struck yesterday in our session with all the research community that we, some people confessed to being tax geeks, I think was the words that were used. My IT colleague has called himself an IT geek. So at the risk of an IT geek and a tax geek working together, we're going to go on this journey, and hopefully it will represent what we hope to be good interdisciplinary research project involving tax and technology. I would also mention that we've got research funding from the Irish Research Council to do this project, so I would like to acknowledge the Irish Research Council for that. But anybody involved in funding applications might appreciate it's quite a breakthrough to get funding for this kind of project, because across university land, particularly back home, it's very difficult to compete with some of the other areas for funding, particularly in the physical science space. So for social sciences, funding is very challenging, but particularly tax within that. I mean, people are saying, really, you need money for tax research? So this is something of a breakthrough, and hopefully will lead to more significant funding through a European funding proposal that we've recently submitted. So the introduction here is based on a very simple premise, and the OECD, the UN, all the international institutions are talking about digital transformation, in this case of public sector administration, which is aiming to harness emerging and new digital technologies. And I suppose the word I want to emphasize here per the OECD is the co-creating of services, data and content. And it took me a while to get my head around what they exactly mean by co-creating. But it's interesting because all the funding bodies in third levels in funding research bodies have taken up this language around, so we're all co-creating now. And the question is, who are the participants in this co-creating? And it struck me that very quickly that it certainly involves, in this case, the technology companies. It certainly involves researchers. And in the tax context, it is and will, in the context of our specific project, involve tax administrations. And our objective, particularly in the bigger project that we're working on, is that that also involves citizens. And that's why I think it's core to this particular forum, if you like, in terms of putting the citizen not just in as the afterthought and asking them how they're getting on with the technologies after been implemented, but that they're really core to the development of the actual technologies themselves. Taxes and tax administration is clearly the focus of our particular area of public sector. And the other thing is we've framed this as being fundamental to the deliverable of the Sustainable Development Goals. And you might say, well, why did we need to leverage that, if you like? And I suppose the cynical part might say it's because sometimes research funding is framed around your contribution to the delivery of SDGs. But actually, as I got into looking at them, which I hadn't done in any particular detail before looking at this proposal, it's very clear that number 16 and 17 are particularly relevant. Number 16 refers to building effective, accountable, and inclusive institutions. And number 17 refers to strengthening the means of implementation and revitalizing the global partnership for sustainable development. And when you read into both of these, there is no question but the tax administration is a key institution in terms of its functioning to ensure that the taxes are collected that are a key part of the delivery in an overall sense of SDGs. And actually, the more we started to look at it, but as a tax person you do this, the more I thought tax is actually central to the whole initiative around what the UN is trying to do around SDGs. But it's rarely talked about under tax scholarship where I come from, so this was kind of new. And we think that's possibly why the Research Council liked it. So the disruptive technologies in tax administrations, and we've heard about some of them today. We just had a great session on data analytics, so obviously I won't labor on that one. But I would say, whilst the project is new, I've been working with my colleague for the last 18 months or so on the ideas, and we've actually touched base with a number of tax administrations. So throughout the presentation, I will make reference to some data we've already collected that's helping informing the future direction of our project. And one thing that's for sure is when it comes to artificial intelligence, robotic processing, analytics, or blockchain technologies, without question, these are the buzzwords, these are the words that are on all the funding proposals in this space as well. But actually, when you get talking to some of the people who are heads of research within tax administrations that I've spoken with, there is a real sense of overpromise and under-delivery to date. Now, that's not every tax authority, clearly. Some are more advanced than others in their use of them. But there is one thing for sure, they're all talking about them to a greater or lesser extent, and I would say a greater or lesser knowledge level around it. And there are also big issues about who's leading the developments of these technologies within the tax administrations that we've dealt with. So how do we phrase our research objective? Well, it's fairly straightforward, which is a good thing as an academic, I guess. So while emerging digital technologies can offer value propositions in tax, there is a lack of independent scholarly work on how these institutions can effectively adopt them. And I think it's interesting if you go back to the previous session where there was a quote from an article back in the early 60s. The reality is we're talking about these things today. It will be something else in 20 years' time or in 30 years' time. So the idea of critical in our project here will be research goal number 3 in that context, which is hopefully that we through our analysis and empirical work that we will do, we will provide a practice-based, because it will be very much based on what's happening in the tax administrations. So practice-based guidance on how to effectively deploy technologies to provide taxpayer-centric services. A wild goal beyond that is that we learn something around adoption of technology systems within one area of public administration, namely tax, and transfer it and translate the learning over to other areas of public administration. Obviously, there's different cultural contexts there, but we believe there will be some, I was going to say cross-cultural learning, but certainly cross-departmental learning. Goals 1 and 2 then are to understand the process currently within these institutions around adoption, and to understand the nature and importance of, and this is quite a mouthful because there's a lot of things in there at the moment which we have to do a little bit of refinement of, which is contextual, organizational, technological, individual, or human factors in the effective use of these technologies. So there are 3 research goals. We converted them into questions. And firstly, we're asking the question of what are the major constructs that determine the effective use of these technologies? How do the factors lead to benefits such as, and the typical benefits that are thrown out are effectiveness, and we have to look at how we measure that clearly, accountability, transparency in tax authorities, and these are true things that are really true to the SDGs as well in terms of transparency, and ultimately achieve the desired impacts on taxpayers, or maybe it should be for taxpayers. How is the adoption of these technologies impacting traditional governance, risk management, and other high-level organizational processes within tax administration? This is very, very significant. Each of the administrations we've spoken to already, there's a lot of fear around the implementation and adoption of these technologies. And the biggest fear is around risk. They see it, yes, as a great opportunity, but they're seeing huge risks with it. And the reality is a lot of the institutions we've already spoken to are actually approaching this in I would say, quite a conservative way. They would say necessarily so. So as with, I guess, any good research project, we are looking at, I suppose, theoretical underpinnings to it, and I'm not going to labour on this particular point. Suffice to say, that's where my colleague comes in, Diego, because he's done a lot of work on models of technology adoption and what leads to them being successful. He's also done quite a bit of work in the e-government space in particular, and as you can imagine, adoption of technologies in a public sector environment is very different to adoption of technologies in a private or a private sector environment. So basically what we've done is we've done a trawl through literature on various models, and we've come up with what I think is a model that we're going to try to work through based on deficiencies of existing ones and our own version, if you like. So this is our starting point, but we will hopefully develop this through our research project when we come up with major findings. I guess the thing that's significantly different to any previous model is the final box, where we're going to make some attempt to when talking to the tax administrations, of somehow linking the role of the technologies and the delivery of SDGs, right? And I know that's a very, very big ask, but I think this gets at the heart of how sometimes tax administrations are measured, to what extent they are measured, I should say, first of all, how they are measured, and particularly around new initiatives. And a lot of my research to date has been involving large multinationals, and I'm currently doing a lot of work in the area of another initiative within large businesses, which is cooperative compliance initiatives over here, known, I believe, as the compliance assurance process. And there are big issues within tax administrations about contentious if you like, measuring of the performance of these initiatives, which tend to take significant blocks of resources, and somebody decides, or some group decide, these initiatives have to be run with, whether it's as I said, a compliance assurance process or something like a new technology. And there are real issues, I think, emerging around the decisions around running with these and the measuring. And one thing that seems to be a recurring problem is, if an initiative isn't working, is it possible to pull it? So quite frequently we're finding in the research, in the public sector, once an initiative is implemented, the pioneer wants to keep pioneering it and almost can't withdraw from the initiative, and that's pretty unhealthy thing. The previous slide, I didn't go through it because it has been basically giving us all the different kinds of things, constructs that could dictate whether or not we're going to see a successful adoption, and that's kind of built into the model. So just in the interest of time, I'll push on. So what are we doing? Well, we're going to do 3 case studies, and we already have the agreement of 3 tax authorities to be involved as the 3 case studies. So right at this point, I'm not going to mention the 3 tax authorities. However, suffice to say, they are from different parts of the world, so that we're going to get a sense of what's happening across different cultures, because different cultural contexts within which these technologies are coming into play is a very important factor. And we are very thankful to the 3 tax authorities. We spoke to many more. I think eventually tax authorities will come on board more with these kinds of projects. I understand the fears they have sometimes about it, but sometimes I think it was one of the previous panel speakers talked about the concern of what they thought we were going to do, or what kind of access we were looking for. I mean, we don't need access to private sensitive data on individuals to do the kind of work we're trying to do. So it was really refreshing to get the access to the 3 tax authorities. And you know, they're very well positioned to give really concrete input into this particular project. And again, I think that was a critical thing in terms of being successful with the funding application. So we're going to do a highly qualitative immersion in these. We're not looking at a quantitative analysis at all. We're going to talk to people at different levels. And I think one of the biggest things we're going to come across is talking to the people working in IT within tax and talking to tax people working within tax. And already this is clearly a challenge around the adoption of technologies in tax administrations. I was at a presentation about a year and a half ago when one of the data analysts employed in the Irish revenue very excitedly made a presentation. And then you could see a lot of the tax experts sitting saying it's very clear he has a lot of data but is not sure what to do with it from a tax point of view. And it can cause frictions, I think, in terms of power plays within these organizations as well. And we just need to work at that. That's what this project is about. The current position. So I have 2 slides here before I close, which is to give a flavor of what we've already got evidence of from talking to about 6 tax administrations to inform our proposal in the first place, okay? And I think these are interesting, but we need to put more meat around them. A strong sense we should be using these technologies, but not exactly sure how. And I'll take that with the second one, which is, are we out of step? Are all the other tax administrations adopting these technologies? I think the funniest interview I did was where somebody in charge of research in one of the tax administrations said to me, I really panicked that we were way behind the curve. So I said, better go to a conference, see what the others are doing. Went to a conference where all tax administrations stood up and pretty much all their slide deck was the same. So she came back and said, you know what, we're all just swimming around here and there is a concern about who's going to move first, what's the competitive advantage going to be, and they're all just they're all really wondering about the risk dimension of it. So I think we're not as far advanced, that's my kind of conclusion so far, as I thought when I first came to the work. Significant ambiguities about value add. So they're saying we just don't want to embrace these technologies because everyone's embracing them. We certainly don't want to embrace them because the tech companies are telling us they're the next big solution. And that's another big imperative, I think, for obvious good commercial reasons on behalf of the tech companies. Real issues, not in every tax jurisdiction, and I found these are extremes. So you've either got tax administrations who are very resistant of embracing the new technologies, or you've got the ones that are just experimenting all the time, and this really is part of their culture, and they're at the front end of the use of the technologies I mentioned earlier on. And I'm happy to say at least one of those are one of 3 that we're working with, so I'm really excited about getting in and seeing how they're using the technologies. So I think critical point for this conference, third last one there, is the citizen ready? Okay, so particularly even if you look at something like the chatbot technology, which we've taken a little bit of a look at and we plan to take more of a look at, the big issue is around trust. That's the one that's coming up so far. And the concern is it going to make it better or worse? So if you've already got some doubt about your relationship with the revenue commissioners, do you need to talk to somebody to enhance that trust relationship, or do you need to actually do something through a piece of technology? Also, what's the position of marginalized taxpayers? And this is coming up as a real issue. And I base a lot of my work also at the moment in a Centre for Social Gerontology, and we deal with a lot of elderly community where we have a lot of volunteers coming in, helping them with computers for all sorts of reasons, right? We ran it by them, the notion of doing anything to do with taxes via the computer, and the sweat started to break out in them, as well as some of the tutors, I think, because when you mention tax, a lot of people break out in a sweat. So I think this marginalized taxpayers are a little bit lost at the moment in terms of the rush, if you like, to embrace these technologies. And then particularly, I suppose, places like back home, where you have a tax system that's in place for many years, there are serious legacy issues, right? And the biggest challenge they have is running parallel systems. So what they'll always say is somebody's got to keep the show on the road while we're also doing this other development work. And that invariably brings us back to resources as well. So nearly there. On chatbots, I'm just going to mention the chatbots in particular, because the test users in the cases that we've looked at where they've already used chatbots and they've done some test cases, They said that broadly the test users were happy, but then I asked who were the users, and they were all from within the revenue, within the tax administration. So I just said, did you use anybody from outside? Did you use an ordinary citizen by any chance? And no. So, and I'm not saying, by the way, that revenue officials are not ordinary people, in case anybody takes that up the wrong way. But you get the point. But they admitted themselves this is a real issue, you know, in terms of who the user group are. A real problem around foreign languages. So a number of the countries we're speaking with, English is not their first language, and therefore there are real problems around the translation issues. And when that happens, they said you just lose the whole customer context within which the chat is taking place, if you like. High startup costs, uncertain benefits, as I mentioned earlier. And since I know there are many lawyers in the place, the thing that frequently comes up is this real risk. They're afraid of the use of the chat transcripts by the taxpayers for litigation purposes. So I'm going to leave that one to the lawyers, but I'm just letting you know that this is an issue that's come up. And there are lots of ethical-based issues around this. So won't bore you with next steps. Next step is we've got to do the work, right? The rest of the work on the project. But I'd love maybe at a future conference to be able to come back and say what we've actually found. I do think it's unique because we're getting this access to tax administrations. So we're not making up stuff. It's going to be very real. And again, I suppose we talked a lot yesterday about the increasing complexity of tax systems. So I just thought I'd leave you with one of my favorite slides, where if we're finding it difficult to get back and work with the increasing amount of tax legislation that's happening, how on earth are citizens meant to get to understand, and can technology play any role in that at all? Thank you very much.
Is it on?
It's still not
Oh.
on there.
Okay, so hello everyone. My name is Pavel Martinik and I came from Charles University in Prague. First of all, I would like to thank Nina for having me here. It's a really great privilege to speak for the first time at a conference held in the United States, and I really appreciate it, so thank you very much. Since I got the notion that I am one of the last obstacles between you and the dinner, I will try to keep it short, so there is some time for the discussion. First, please let me to put some things in perspective. As I said, I am from the Czech Republic, which is a country far, far away to the east, located in Central Europe, with slightly over 10 million inhabitants. In 2015, there were submitted 400,000 corporate income tax returns and over more than 2 million natural person tax returns. You may ask why I didn't use more recent data, but that's the most recent data that the tax administrator publishes, so that's the reason why. The Czech Republic is also a civil law country, which means we have a strong role of the legislative branch of the government in deciding what the law is, and the courts merely apply the law as is adopted in the in the parliament. I actually divided the presentation into two parts. The first part deals with a case that happens in the Czech Republic right now and is about Airbnb providers and the approach of the tax authority to the providers of Airbnb short-term rentals. And the second part of the presentation will aim on the proposal of the digital taxation. Both of the topics are covered by the sharing economy umbrella. I'm also at the same position as Emir because I am only at the beginning of my research, so I will probably ask more questions that I will provide my answers to. Well, first of all, as was already said today, for another countries, there is no set of taxpayers' rights in the Czech Republic. The rights of taxpayers are dispersed through the legal system. The basis for the taxpayer rights are in the Charter of Fundamental Rights and Freedoms that was adopted at the early 1990s. And basically, the Charter says that taxes and duties may be imposed only on the basis of the law. The other relevant piece of legislation that deals with taxpayer rights is the tax code. And it says that the tax authority exercises jurisdiction only for the purposes for which it was entrusted with. But there is one key limitation of the taxpayer rights in the Czech Republic, and that is the authorization for the tax authority to conduct so-called search activity, which is obtaining of data on income, property, and any other facts relevant to the correct identification, determination, and payment of the taxes, and requiring explanation from the taxpayers. This means basically that the tax authority may use any means it deems necessary to establish or to search for any data they need for assessing the tax duty of any of the taxpayers. I'm glad that previous speakers talked about the legality of the obtaining of the evidence in the tax proceedings, because I have to say this is a different case. In the search activity, the tax authority doesn't need to find any evidence that will later be used in the court. It may simply analyze data that came from whatever source, and based on the search activity, they may start formal tax audit. So the search activity is quite a powerful tool in the hands of the tax administration, and basically there is no public oversight over this, which occurred in the case I will discuss later. Also, there is no taxpayer rights code on the European Union level, which was already discussed today. There are some provisions in the Charter of the Fundamental Rights of the European Union, but there are no specific provisions on the treatment of taxpayers. I would also like to briefly discuss the concept of sharing economy, so we are all on the same page here. There is no legal definition of the sharing economy. In the literature, there are some features of the sharing economy that occurs. First one is that it covers services that are provided on demand basis, which means that standard economy usually is provided on the supply basis. For example, when you have public transport, the bus will go regardless if there are any passengers on the bus, whereas in case of Uber, for example, the driver will drive only if there is demand for his or her services. The sharing economy also uses digital applications or platforms as intermediary that connects the provider of the service and the customers, and the service and goods are often provided by private individuals. So it's not the main business for them. So now I would like to focus on the Airbnb case that happened or is happening in the Czech Republic. First of all, the tax authority acquired somehow data on payments for short-term rentals in second quarter of 2018. It's hard to say how they acquired it because they have no obligation to disclose the way how they came across it. There are actually two theories how they acquired them. The first one is that they used cross-border cooperation with the Irish tax authority, and they obtained the data from the Airbnb headquarters in Europe, which is located in Ireland. The second one, which is quite more disturbing for me, is that they ask, because in the Czech Republic we have this central register of banking accounts, and that they acquire the information about the number of the account the Airbnb uses in the Czech Republic for sending payments to the providers of the short-term rentals, and that they went to the bank which opened that account, and they ask for all the transactions that happened from that account. A series of interviews with persons who were recipients of the payments from the account was conducted shortly afterwards. Those persons weren't informed why they are interviewed, and based on the public sources, the person who didn't abide and did not disclose that they received such payments in their annual tax return were fined, and the tax was imposed of them. So there are a few questions I would like to discuss perhaps later in the discussion. Well, the first question is determine what are the conditions for the data to be acquired in compliance with the rules of the protection of taxpayers' rights in the Czech Republic, because, as I said, even if the data are acquired not in compliance with constitutional rights, for example, in the Czech Republic, they still may be used as a basis or as a hint where to conduct formal tax audit. And then in the tax audit, the evidence for the tax proceedings or subsequent administrative proceedings that will review the decision of the tax authority can be legally acquired. So this is one of the questions I would like to discuss. The other one is whether the conditions are balanced in the digital age, because, as I said earlier, the Czech Republic is not a common law country, and despite the fact that the tax code was amended several times in the past, the rules for the examination procedure that may be used to acquiring some information is really old, and in the digital age, for example, in the big data analysis, the impacts on the taxpayers may be very serious if the tax authority doesn't use the examination procedure properly. And last question, what are the impacts if the data were not collected in compliance with the rules on protection of taxpayer rights? This question is, I think, the simplest one, because even if the rules were not abided by, there would be no consequences for the financial authority, because, as I said earlier, there is no public oversight over this procedure. So this was the first part of the presentation, and the second part focuses on the digital tax in the European Union. There was an EU-wide tax proposal, but this was abandoned in March of 2019, so approximately 2 months earlier, because of the reluctance of several member states. But other member states have stated that they would introduce this tax nevertheless on the national basis. I don't know if you are familiar with the concept of the digital tax, but in France, for example, it's called the GAFA tax, which means Google, Alphabet, Facebook, and Amazon tax. It should focus on large enterprises that deals in digital services business. And the aim of the tax is to tax the taxpayers, in this case, mostly American companies who has headquarters of their European branches located usually in Ireland, at the places where the profit takes place. There are also thresholds for application, so not all companies that deals in digital services business will apply. The threshold in the Czech Republic is to be set at 75 million euros in annual turnover and 50 million Czech crowns in local turnover. So it's obvious that it will have impact only on the major players in this business. It's only applicable to digital companies, and the revenues that will be taxed are either the revenues from digital advertisement or the sale of the customers' data or provisions, for example, for the services that are offered through the platform. Well, there are also several impacts that need to be addressed. First one is how to define worldwide revenues, because I believe that we do not have the same accounting standards in the Czech Republic as there are, for example, in the US. Moreover, there will be different rules on how to determine what an income is and what gains would be, because as we discussed yesterday, there can be some tax incentives that wouldn't seem fair in the Czech Republic, whereas they would be totally acceptable in the United States. The other question is how can the Czech tax authority obtain data on revenues from the other jurisdiction? Because I don't think, or this would be something that would be publicly available. So some kind of international cooperation would need to be established. And if I would be a taxpayer located in the United States, I would be very reluctant that data from the tax returns I submit in the United States are shared with some small country in the Central Europe to determine what are my worldwide revenues and if a digital tax would be applicable. And the last question is rather a practical one, and it may also happen, how to determine an income that takes place in the Czech Republic and that is obtained through these platforms. If we look at the example that is in the presentation, we see that there is no clear criteria or criterion how to determine that, because some suggest that it should be based on the IP address, but since there will be jurisdictions that will introduce the digital tax and some others that may not introduce such a tax, it would come for the providers of the digital services to provide inducements for its clients to change their IP addresses to be located in some other countries, which is even nowadays quite easy and possible from the technical point of view. What are the conclusions for the taxpayer code in the 22nd century? Well, the taxpayer rights, I believe, for them there is a need to adopt a uniform code or at least some principles. So there is a standardized set, because as the economy becomes more and more globalized, this must also happen for the protection of taxpayer rights, and there must be a set of minimal rights applicable in all countries, in my opinion. basically, that would be all from my side as introduction for the further discussion. Thank you for your attention.
PowerPoint skills. That's fine. For better time management, I will thank you very much for your attention and for your time. This is the second time for me to attend the conference, but first time to be as a speaker. Thanks a lot for this opportunity and for this opportunity to speak up. And can you hear me? Is it better now? Oh, I can hear myself. Great. These conferences inspire me. Thanks a lot. As James already said, I'm a research fellow with the International Communities Organization, where for the last 2 years I've been leading a research on taxpayers' rights and the importance of self-determination in terms of the progressive socioeconomic rights realization. And I would like to start with a clarification that I don't own any Bitcoin, and I don't advertise to buy any. And during this presentation, I will mention Bitcoin. It will be used as a digital currency, and through the term of Bitcoin, I will be talking about the underlying technology of digital currencies like Bitcoin, Ethereum, and that is called blockchain. And I'm sure you heard a lot about blockchain, and for the last 3 years, I've been collecting information on that, and it's extremely hard to find trustable source. And I hope to provide you with the best knowledge I have at this moment. And secondly, I will be talking also about the self-determination, and different people have a different conception of what that means. It derives from the international public law, so if any lawyer that deals with international public law is here, I would like to clarify that self-determination is also used at the domestic level, especially in Switzerland with direct democracy. And it means a way to express the need to respect for the principle of equal rights and fair equality of opportunity, and that is extremely relevant to the current technologies. And this presentation is about technologies through the lens of self-determination and self-accomplishment and self-responsibility. And I would like to present an analysis of blockchain and cryptocurrencies through the lens of taxpayers' rights, highlighting the need for self-determination of both taxpayers and tax agencies, and in the end it will always lead to a better effectiveness of tax authorities. And so far the assessment shows that tax agencies in most of the countries are failing to provide an appropriate legal framework that creates a tax liability, and on the other hand, taxpayers are following bottom-up approach, using the opportunity to benefit from the situation. And in this regard, from my research, it's clear that self-determination of all the stakeholders will lead to a better protection of taxpayers' rights in the long term, and it will also be very helpful to organize the system and to harmonize the systems. So what blockchain is? Okay. Oh, I forgot to mention that the motto of my presentation today is "The future depends on what we do in present." So, blockchain is a continuous sequential chain of blocks containing information. And we should use our imagination. There is a course at Geneva Academy, Imagination and Law. We always have a first block that could be identified. So if we even think about that is possible, probably it may happen. So there is this chain of blocks, and all the blocks are linked in using cryptography. And cryptographic this block contains cryptographic that has previous block, timestamp, and transaction data. And more often, copies of blockchains are stored on many different computers independently of each other, but at the same time, we assume if someone after 20 years holds these powerful blocks, it may happen. I don't know if all the experts would agree with me, but one day, maybe. And at this moment, a lot of international organizations, especially in Europe, they are holding workshops and events talking about blockchains, what kind of opportunities do we have with that, how we can use it. It's already used for medical records, through systemizing medical records, and in the long term, it will also be connected to the insurance companies providing data about customers. It is also could be used for e-notary, for collecting taxes. And last week, there was a workshop in UNESCO talking about blockchain as a future for transparent elections worldwide. And all the cryptocurrencies are based on blockchain. What is Bitcoin? Bitcoin is more a commodity than a currency. If you would ask me 2 years ago or even 1 year ago, I would give you different information. But at this moment, value transfer is insane. I don't agree with that, because if we take Ethereum, it's quicker than blockchain. With Bitcoin, it takes time. It's irreversible, yes, that's true. Anonymous, to some extent, it depends where the wallet was made. Let's say in US or UK based, it's easier to identify the user. It's secure, again, to some extent, and there are no restrictions or limitations on where or how one wants to send their personal money. And as you may have heard, there are a lot of problems, and there is so much uncertainty around cryptocurrencies, and especially Bitcoins, and some people genuinely think this is the future, and others are terrified it could destroy our economy. But many from both sides agree that we could get Bitcoins to work, or any other cryptocurrency. And if we can trust the digital currency to work without the middleman, then the way the world economy functions could be transformed for better. And there are a lot of different cryptocurrencies. Who know something about IT, they try to come up with an idea. Switzerland, for example, Zug Canton, they invest in a lot in projects and startups based on blockchain, and also cryptocurrencies providing tax cuts and so on. And different cryptocurrencies, they're different because some of them are quicker, some of them have more features, more benefits, etc. Why is it useful? It was proposed to the international courts to use it for victims and witnesses protection programs. Also, a lot of people use it to send remittance home. There is nearly no transaction fee. Again, that depends on cryptocurrency. And if you know Ethereum, they explain that they use the transaction fee to their development. Let's see how it goes in the future. It also provides immutable records, provided rights through immutable records, gives the possibility to create a true sharing economy. As mentioned, it was discussed by Pavel, Uber, Airbnb, as the ultimate goal of blockchain using cryptocurrency is a sharing economy. We should think about decentralized sharing cryptocurrency. And there are also biases and challenges. Bitcoin is decentralized currency, and it's not meaning that it's not controlled by any central institution. And in April 2018, IMF and World Bank, they came up with an idea to analyze blockchain, and they created their own cryptocurrency, learning coin, which is accessible only to them, to make sure they provide an analysis with milestones, how to use it, and how it could be used in the future at the global level. And the value is one of the challenges of Bitcoin, is determined by the fact that everyone uses the same software and believes in its value. So it has some biases, of course, to some extent. And then, of course, dark web, since Bitcoins are often believed to facilitate completely anonymous transactions. But at the same time, I would say that secret services are quite good in those terms because they shut down the markets in dark web. And there is also, it has an unstable exchange rate compared to fiat currency. That is true. Perhaps that means that decentralization is far away from now. And we also have the rhetorical question, who may control Bitcoin, right? However, despite the challenges and biases, Bitcoin is legal or not restricted in most of the countries. Countries colored in green on the map are those where Bitcoins are legal or not restricted. And according to this global map of cryptocurrency provided, I would like to emphasize that by Bitcoin legality by country says that in 10 countries it's illegal, in 9 countries it's restricted, and in more than 60 countries we don't have any information. How is that? And then when you narrow down a little bit the research, you find this map. Here I would like also to make a few examples on Germany, focusing on EU and the Russian Federation because the color changed. The restricted countries are the same, but where the situation is unclear, the colors have changed. And one of the examples is Iran, for example. Due to the imposed sanctions, for example, Iranian authorities considering opportunity in cryptocurrencies due to its potential to challenge exertion of extraterritorial restrictions. So we can see that cryptocurrencies are used in regard to political and security developments in the world. So why am I here, right? Talking about taxation and cryptocurrencies and taxpayers' rights, how we can connect them, and what should we focus on as tax authorities. Legal tender, buying and selling cryptocurrencies. Those are 3 main points that I would like to emphasize, and during my research I found that it could be useful to provide legal framework for. Buying Bitcoins is not a taxable event, but different countries deal with that differently when it's bought and you keep them, the cryptocurrency. But when you sell the trade lot that you have held at least for a year, you may only have to report long-term capital gains, most of the legislators says, and which are taxed at lower rate. So cryptocurrencies are commonly advertised as an investment. However, no one at this point would advise purchase digital currency unless you have some spare money that you are not afraid to lose, right? And to narrow down, in the EU, it's legal, but at the same time, Germany is leading in this regard because if an order by the Federal Ministry of Finance that allows making purchases with digital currencies without taxation, since virtual currency is considered an equivalent fiat money. This ruling created a precedent for the other EU countries on how to tax cryptocurrencies while providing exceptions for some types of transactions. And it was followed by Canton Zug in Switzerland, where they invested a lot. And we know about the US, where it's more about property, it deals less property, and daily updating regulations how to deal with that. And then Russian Federation is a very good example when a country has problems dealing with human rights protection and how that reflects in dealing with taxpayers' rights protection, if that exists. And in 2015, Russian Federation took a step back when Constitutional Court of the Russian Federation ruled that the decision of the European Convention on Human Rights should be implemented and take into account the supremacy of the Constitution. And the decision was mainly addressed to the Yugos case. It was about taxation, but not cryptocurrencies. But it also affected other cases. And in terms of cryptocurrencies, the situation is the same, because following the previous decision, an appeal court in Moscow allowed the inclusion of cryptocurrency in the bankruptcy of a debtor, and now the interest of lawyers is changed to the way this measure will be implemented in the absence of special legislation. And tax authorities are only currently engaged in the development of legislation regulating the concept of cryptocurrency in the country. It was designed in January 2018 and it's still a draft, but at the same time, Central Bank of the Russian Federation is making a list of taxpayers, of entities as well, who bought any cryptocurrency. And the cryptocurrency is perceived as a stock, and it will be taxed accordingly, despite no legal framework using the old one. The second way to, and thing to deal with is mining. And we should make a difference, because mining doesn't mean transaction verification process when you receive a fee for that. And mining has limits, as Bitcoin's amount is limited. There are only 21 million Bitcoins, and today the circulation supply is almost 18 million. That means that there are only 3 million that left to be mined. And that means that perhaps in 2 years, if we have no legislation, there will be no regulation, no need for that. I will also skip cloud mining and other different, there are two different ways how you can get Bitcoin. It is by mining new Bitcoins and through transaction fee. And mining is very popular in Eastern Europe and Asia due to the low electricity costs. And at the same time, what kind of legal advice newly established entrepreneurs, as legislator called them, is that first they should set up a legal entity, and secondly, to make sure that the actual physical address with all the equipment is different from the legal address. Because in Central Asia and Eastern Europe, corruption, nepotism, and lack of legal protection, and in general, rule of law implementation make the tax authorities come in and confiscating your equipment despite the price you paid for that, and you're still waiting for income. At the same time, people in different countries continue Bitcoin mining without paying taxes for their earned income, and tax authorities in their turn without any tool for recording and accounting the activities, and therefore a scarcity of information and official reports on the tax frauds, illegal incomes, and deficiency of legally binding procedures create a favorable environment for corruption and illicit oligopoly. And this is a point where a problem of double taxation arises as well. And the last one is ICO, IPO. We used to have a company which would like to grow and use to have the income to invest in themselves. But we also can talk about ICO or IPO. And following the Germany's lead in this regard, they are against ICO and advising all the taxpayers and companies to avoid that, since there is no transparency and it's not sufficiently regulated, that also generates an underlying business risk. And my conclusion, you can find it here, and to make the presentation shorter, I would like to briefly emphasize also that in the long term, when we have the situation where civil society is more advanced in using digital technology than a government or a tax agency, that refrains the economy development, and it leads to the pro-left authoritarian regimes in the country. And there was conducted a research between the two Italian universities that compared new EU member states and suggests that more mature democracies are associated with higher levels of direct tax. And in this regard, cryptocurrencies development and blockchain as well will lead to the direct taxation that prevails the indirect. Thank you for your attention.
So we're going to do something a little different. As opposed to opening it immediately to the floor, we're going to have a couple of follow-up questions, and then we'll ask for questions. I think as Nina alluded to, when we were putting this panel together, these are three very different topics kind of going on here. We have a tax administration fairness question, we have a tax authority question, and then we have kind of an individual emerging technology question, and information technology security for Alan. And for 2019, we really struggled on how these all fit together. There's a common thread of digital emerging technologies, but I would hate to be putting this puzzle piece, especially if it was cut up into 3,000 pieces. But when we started talking about it, when we realized that maybe in 2019 they don't make sense, but in 2100 they make sense for a 20-second tax administration, these are all issues that we're going to have to confront, and these are all really the same side of the coin. We as tax professionals can't isolate ourselves from technology. We're going to be forced to walk arm in arm with IT people. We're going to have to accept that what is technology today is not technology tomorrow. And for somebody who was born, somebody's 18, Bitcoin isn't technology. Uber's not technology. These things have always existed in their mind. So these are just things. And I guess my first question is how do we begin to measure this? What's the role of objective data in creating the 20-second tax system? How do we begin to answer Pavel's issue without your research? Do you want to touch on that and what access means to various taxing authorities?
Sure. Can you hear me? Is this working?
Pull it closer. Pull it closer.
Okay. Is that better? Yeah?
I don't know if it's on. Does it seem
Okay, thanks. I guess linking the two things, the point on access is critical. I kind of touched on this a little bit in the presentation, but learning how to measure the impact of introducing the kind of technologies we're looking at in the tax administrations, I think will be approached very differently by the IT people versus, let's say, the tax executives, if you like, working in the IRS or the Irish Tax Administration. And based on my conversations with two tax administrations already, they are finding this really difficult to set what are the clear objectives. Because I challenge them when they talk I won't say all the time, but quite a bit of the time around increasing revenue, around the use of technologies to combat tax evasion, etc., as opposed to using it to make tax compliance more user-friendly, if you like, or customer-friendly. Because not everybody is out there trying not to pay their taxes. In fact, a lot of people are trying to pay their taxes. The question is how utilizing the technologies will make that easier, cheaper, faster. These are the kinds of things. So anybody who's working in academia knows metrics and KPIs have become part of our nomenclature as well. And the one thing I discovered very quickly is if you don't have a starting point, it's extremely difficult to say you're making progress. So I'm hoping through our kinds of research, we're going to get a greater insight into how individual units within the various revenue authorities that we're looking at, how they themselves are being measured, and then what they think the key KPIs should be. I mean, if we had all the answers, I guess we wouldn't need the research, right? But I do know
that tax administrations themselves are users of taxpayers' funds. Therefore, if they're investing in these technologies, we need to see a return in a very clear and transparent way. It's complicated, but we need to work at it together, is what I would say.
Alan, are you screaming down there internally saying you can't turn over tax data to your average taxpayer because of lack of security?
I'm not sure you can turn over your tax data to your average government for lack of security. I think that's as much of a problem as anything else. Thank you for letting me be on this panel. I am not a tax expert. My wife does our taxes, and I think we just do whatever TurboTax says. So I'm somewhat new to this field, but my expertise, such as it is in cybersecurity. And so I come at this from the perspective of just thinking about huge troves of personally identifiable information, not just from a privacy perspective, but just from a cybersecurity perspective, and also from a national security perspective. Before I was here at Minnesota, I was a national security policy lawyer in the Department of Justice. And thanks to the fact that our otherwise excellent Office of Personnel Administration held all my security clearance information, as well as that of millions of my colleagues, in unencrypted form, which now is sitting somewhere in Beijing. I have many lifetimes of free credit reporting to my name, which is nice. And I am just struck by potentially how much more of this information exists in tax databases, whether or not they're held by governments, whether or not they're held by individuals, whether they're held by academics, which, as we all know from the Cambridge Analytica scandal, is no panacea for information security. So one thought I have is just of tax as yet another vector for cybersecurity vulnerabilities. And then also when it comes to some of the emerging technologies, for instance, chatbots, there seems to be an enormous potential there for security vulnerabilities like fraud. Imagine a hacker gets a hold of an IRS chatbot, or just manages to spoof an IRS chatbot and convince some civilian that they're talking to the IRS, when in fact they're talking to a hacker who tells them that all their problems will go away if they wire $10,000 into this bank account. These are the sorts of issues that I think that folks will need to deal with.
And I think, unfortunately, we're running a little low on time, and I don't want to miss opening it to the floor. So at this point, are there any questions out? Yeah. That didn't take long.
Thank you. You just opened the door of what I wanted to ask about, particularly with the U.S. and FATCA. And as I understand it now, there's more than 100 countries on board with it, and 180,000+ financial institutions that have registered with the IRS. How can Americans abroad be assured that their data that's being collected and shipped around in all this cyber world is safe?
They can't.
And when legislation like this is passed, shouldn't there be some requirement of all of the participating institutions to comply with some form of data protection?
Yes. This is one of the biggest challenges, and this is not to criticize the IRS. It's not like anyone else in the government does it much better. It's not like most private firms do it much better. This is a part of a generational challenge of embedding cybersecurity practices in every branch of life. Tax is not by any means worse than anybody else at this, but it's also no exception to this need. And so, stay tuned.
If it makes you feel any better, it's probably already too late.
So, some people have heard this story before, but I was in a meeting of the IRS senior executive team. It was actually a security, and I think it was the executive steering committee was called the Data Integrity Security something or other Executive Steering Committee, and a former commissioner that was chairing that meeting. He was the commissioner at the time, and as a throwaway remark, he was talking about some of the information exchange agreements that we had entered into, and sort of acknowledging that the countries didn't have the same standards of protection of data and privacy protections and confidentiality protections that we had. And the risk officer said, well, we did a risk assessment and we decided to mitigate, to accept the risk. And I was just sitting there like, this is not your risk to accept. This is the taxpayers' data. And as someone who's also been affected by the OPM thing, it's like, no, you can't accept that risk from me. And that led to my legislative recommendation this year, and it ties into administrative law in the United States. If the IRS is going to enter into an agreement where we do a risk assessment and we say it's below, the standards that taxpayers enjoy in this country, which may not be the highest, but still at least it's what we've got here, then we have to put it out for public notice and comment so the world knows and can weigh in and say, before you enter into this agreement, we have these concerns, this is where we are, what concerns, let's hear from you. And if we, despite that, go into that agreement, then the individual taxpayers who are going to have that information exchanged need to be notified that that information is being sent to a country that is below our level of standards. And that may undermine, the use of this data for tax enforcement, but I think that goes to, saying we need to think about a new set of standards in this 21st or 22nd century as we bring in these kinds of things. I haven't gotten any response back from that legislature.
I think we have time for one more question. Anything else out there? Well, seeing none, it's practically 6 o'clock, so